and welcome back to another episode of the Blockchain Brew Show. This is our new morning stream that I want to do most mornings, Mondays through Friday, as much as I possibly can. And today we have some more Ethereum news to look at, as well as some charts. And if you give me 1 second, I need to figure out what my dog is doing over there in the background. Okay, sorry about the delay. I had to see what was going on outside my house. Welcome back to another episode of the Blockchain Brew Show. Today we're going to cover some Ethereum news, as well as some charts, a little bit of crypto Twitter, and quick Cardano spotlight. So let's dive right on into it. Let's see here. I'm going to share my screen. So we have this story here from on Crypto Potato, and it's really about Willy Woo's tweet. Willy Woo, the well-known analyst. And I'm going to bump the music down just a little bit here. Okay, and here we have capital has been rotating from Bitcoin into Ethereum, said popular analyst Willy Woo on Wednesday. He posted a chart showing that flows into Ether are around $900 million per day, which has caught up with flows into Bitcoin. This latest climb in flows started when Tom Lee's ETH treasury company, Bitmine, started their ETH accumulation, he said. The flows, which appear to be the highest for at least 2 years, started surging in July, indicating that corporate Ether treasuries are driving the momentum. Here's Willy Woo saying capital has been rotating from Bitcoin to ETH. Flows into ETH at 0.9 billion US dollars per day, the silver line, is now approaching Bitcoin's inflows, the orange line. The latest climb in flows started when Tom Lee's Ethereum treasury company, Bitmine, started their ETH accumulation. Institutions driving Ether prices. Bitmine is the world's largest corporate Ether treasury, having amassed a whopping stash of 1.7 million ETH, worth $7.9 billion in just over 2 months, far outpacing Strategy's Bitcoin accumulation pace. This one company alone now holds 1.4% of the entire supply of Ethereum. In addition to the corporate accumulation of Ether, U.S. spot exchange-traded funds have also seen accelerated inflows of the asset. August alone has seen an aggregate of $2.8 billion enter spot Ethereum funds so far, and those inflows accelerated again this week as the asset recovered. Corporate Ether treasury stock trading volumes also flipped those for Bitcoin treasuries last week. ETH prices still have a long way to go. According to analysts such as Axel Bitblaze, who observed that the asset has broken a 4-year bullish megaphone chart pattern before retesting clean. The structure points to $6,800 to $7,000 next, he said. Here's the tweet. ETH broke a 4-year bullish trend megaphone, retested clean, and the structure points to $6,800 to $7,000 next. And it's funny how people are panic selling here at the first dip after new all-time highs. Bear market PTSD is real. To me, to be honest, this setup just screams higher. And here you see a megaphone channel pattern, and he has the measured move up here to around $7,000. And let me check in on the comments. Hey, Real Meta Crypto, welcome in to the chat. Ethereum's market dominance has also increased at the expense of Bitcoin, which has dropped more than 10% from its all-time high earlier this summer. ETH market share currently stands at 14.57%, having doubled from a low of 7% in April. Meanwhile, BTC dominance has fallen to 58% from its high of 66% in June as capital rotates from one asset to the other. There's another altcoin season confirmation. It's kind of a social confirmation that I should go check on. And it's, has Benjamin Callen now kind of changed course from saying that Bitcoin dominance will hit 70%. So if he's I'd be curious to see that. ETH price recovers quicker. As if to highlight the notion, Ether has made a faster recovery than Bitcoin this week. ETH has made 4% on the day, tapping an intraday high of $4,638 on Wednesday before it slipped slightly. Ether is now just 6.7% away from its all-time high last week and is outperforming Bitcoin at the moment. Bitcoin is up just 1% over the past day, topping $112,000 before retracing back toward $111,000 during Asian trading on Wednesday. Why is it got to be Asian trading? So there you go. I am expecting that we are entering the period of time where Ethereum is going to consistently outperform Bitcoin. So I am very much expecting that to take place. And sorry, I'm doing a couple things on some other tabs. I'm very much expecting Ethereum to consistently outperform Bitcoin in the coming weeks and months. And this is signaling Ethereum season, right? And what is Ethereum season? It's really the very beginning stages of a broader altcoin season, but the capital has to rotate first. I'll come over here to Twitter and I'll show Willy Woo's post here on X. Here it is, where he says, wait, let me make sure I'm on the screen. Got you. Okay, so capital has been rotating from Bitcoin to Ethereum. Flows into Ethereum at 0.9 billion US dollars per day is now approaching Bitcoin's inflows. This latest climb in flows started when Tom Lee's ETH treasury company, Bitmine, shared their accumulation. So here's the chart, and we see that on July 8th, down here, Bitmine starts buying Ethereum. And then the subsequent move on Ethereum, and this data is from Glassnode, the subsequent move on Ethereum, you see it rising up. If I could draw it right here, you see it rising up to meet Bitcoin's inflows. So, I wonder if it even may overtake it. I don't think it will overtake Bitcoin inflows just because the number is much larger on Bitcoin. But the pace at which this inflow line down here continues to move up is going to exceed the pace of Bitcoin inflows moving up. So that's my takeaway from that. Let me check back in on the comments. Where's T at? Well, you'll have to come back for the evening stream to find out where T is at. My guess is that he is looking for treasures in the garbage. So there you go. Let's see here. another Willy Woo post from August 24th. He says, why is Bitcoin moving up so slowly this cycle? Bitcoin supply is concentrated around OG whales who peaked their holdings in 2011. And he has the orange and dark orange on the chart here. They bought their Bitcoin at $10 or lower. It takes $110,000 of new capital to absorb every Bitcoin that they sell. So guys, I've been saying this for the last couple days now. It's the one second here. I'm gonna be right back. Okay, my apologies over here. Just got a lot of stuff going on outside today and realized someone was coming to look at the roof of my garage, but okay, where are we at? Okay, so we've been saying for several days now that this Bitcoin move here, this sell-off on Bitcoin that we've been experiencing for, since about Saturday, is due to a lot of OG whale wallets, Satoshi era wallets that have been selling off. And when they bought Bitcoin at $10 or lower, it takes $110,000 of new capital coming back into the market for every Bitcoin that they sell. So, guys, that is a lot of pressure. It's not more pressure than Bitcoin can handle, obviously, but it actually makes me very bullish to think that every Satoshi era wallet that sells one Bitcoin, Banana Republic, what is up? For every Satoshi era wallet that sells one Bitcoin, and they bought this Bitcoin for under $10, for every one of those OG Bitcoins that are sold, you need $110,000 of new capital coming into the market. Now, if you're on leverage, okay, if you're on leverage, it might not take one for one. If you're on, it actually doesn't take one for one. If you're on 10x leverage, maybe it just takes, maybe it just takes, 10 point, or $11,000 coming into the market on 10x leverage, right? But you get the point. Like, it takes a lot of new capital coming into the market for every OG whale Bitcoin, every Satoshi era Bitcoin that's sold at these prices. So it actually makes me very bullish to think that Bitcoin is holding these levels, that it's making a very concerted effort, that Bitcoin is making a very strong effort to hold above $110,000 when you have the sell pressure of all of these OG Satoshi era Bitcoin that are being sold. So, it goes on. The comments in some of these were funny. First, Willie Woo says, this differential in cost basis, the supply that they hold, and their rate of selling has profound impacts on how much new capital that needs to come in to lift price. You can look at this as Bitcoin going through growing pains until these 10,000x gain investors are absorbed. So that is a good point. This is a pivotal phase in Bitcoin's maturity. It's a pivotal point of growing pains for Bitcoin. The reason why is because we are entering a phase, a phase of gain multiplier, an exponential multiple gain that is, these OG Satoshi era whales are in so much profit. And that's why, $100,000 was such a big psychological level. Because you have Bitcoin that was purchased under $10, under $5, even, some Bitcoin under $1, and people have unrealized gains past $100,000 per Bitcoin. And so the growing pains that Bitcoin is going through right now is its ability, the market's ability to absorb the selling from all of those very early whales. Now, don't get me wrong. I do not believe that those whales are selling all of their Bitcoin. Like, there are some Satoshi era wallets that are certainly holding out for $1 million of Bitcoin to sell some of them. There are Satoshi era wallets that have a certain amount of Bitcoin that they will probably never sell, right? But I think $100,000 is a big sell point. I think that $500,000 is a big sell. All of these psychological levels are going to be big sell points for all of these whales, and Bitcoin will go through the growing pains of absorbing all of this sell pressure, this 10,000x multiple sell pressure. And then someone in the comments says it's moving slower because it's a mature asset that has gone from a micro cap to a small to a mid cap to a large and to a mega cap. Mega cap assets that are institutionalized will have diminishing returns. Bitcoiners don't understand this concept clearly. And Willy Woo spit our guy up on some game a little bit. He said, agree on diminished returns. But the point I'm making is it's not mature. A mature asset like gold, 6,000 years of use, doesn't have early holders selling who gained 10,000x. Bitcoin is early in its capital absorption. It's sized at $2 trillion versus $20 to $250 trillion for mature macro assets. And then the guy argues back, you were mistaken. Bitcoin is a mature asset that can grow still. Anything on that list is a mature asset. You think since you compare Bitcoin to fixed income markets or real estate market sizes, it's not mature, but that's a fallacy. Also, your entire OP made no sense. Bitcoiners that bought at $10 were around other cycles also, yet it moved fluidly because institutions were not involved and it was much smaller in size, hence much more frictionless than now. Best returns go to the early movers in investing. Late investors get the return velocity they deserve. Willy Woo said, hey Grok, is Bitcoin a global macro asset? Is it considered mature? What would you say it will grow to in order to reach maturity? Can a single equity be considered a macro asset? How old are the ones listed here? And compare them to the age of Bitcoin. Grok says Bitcoin is increasingly viewed as a global macro asset due to its role in portfolios as digital gold with institutional adoption via ETFs. It's not fully mature, still volatile, and young compared to traditional assets. To reach maturity, it might need to grow to $10 to $20 trillion in market cap, matching or exceeding gold with lower volatility. Single equities like Apple can influence macro trends, but aren't typically classified as macro assets themselves. Ages, gold and silver are thousands of years old, millennia. Companies in the list are 20 to 90 years old. Microsoft, Apple, Meta, etc. Bitcoin is 16 years old. So, look, the argument here in this thread, you know, I'm going to land a little bit on Willy Woo's side. I get this guy's point that's arguing with him in the comments. However, Bitcoin can still drop 50% in a season. Knock, knock, who's there? Hey, it's Pepe. Bitcoin can still drop 50%. So volatility needs to diminish quite a bit more for full maturity. And I do agree that Bitcoin will be over a $10 trillion market cap before we see this kind of maturity. And the part of Willy Woo's argument, you're stealing what word? The part of this guy's argument or the part of Willy Woo's argument that this guy is ignoring in the chat is the very concept that gold does not have early investors that are up 10,000% whose finger can be on the sell button in a moment, right? Like that capital absorption is a period of growing pains that Bitcoin has to go through in order to reach its next level of maturity. Okay, so I mean, this is important stuff, I think. So capital rotation, we read that. Next story here, share this tab instead. U.S. to publish economic data on blockchain starting with GDP. Commerce Secretary Howard Lutnick. I'll zoom this out a little bit for anyone watching on the stream. U.S. will start issuing economic data on the blockchain, Commerce Secretary Howard Lutnick said. Lutnick said, pop-ups, man. Lutnick said blockchain-based statistics would soon be available for the entire government. The U.S. Secretary of Commerce, Howard Lutnick, said the Department of Commerce will start issuing economic statistics on the blockchain. The Department of Commerce is going to start issuing its statistics on the blockchain. Because you are the crypto president, Lutnick said during a Tuesday cabinet meeting with President Donald Trump. According to Lutnick, the Department of Commerce plans to issue GDP figures on the blockchain, allowing broader use for data and distribution. Other economic indicators could follow once implementation details are finalized. While Lutnick said blockchain-based statistics would soon be available for the entire government. While the Commerce Department's key data, such as the U.S. Census, is already public, placing it on chain may enhance trust and transparency. Further details, including the implementation timeline and the specific blockchain to be utilized, have not been revealed. The bloc has reached out to the Department of Commerce for further information. Technology is at the foundation of the Trump presidency, Lutnick previously wrote in a post on social media platform X. This administration is going to use Bitcoin, digital assets, and blockchain to drive America forward and remain the leader in the global economy. The integration of blockchain technology into economic data management is just one of many crypto advancements under the Trump administration. Others include promoting dollar-backed stablecoins to bolster the dollar's global reserve status. Under the current leadership, the Securities and Exchange Commission and the Commodity Futures Trading Commission have launched efforts to clarify which cryptocurrencies should or should not be classified as securities. Meanwhile, pro-crypto Lutnick was confirmed as secretary in February following his nomination by Trump. Lutnick previously served as chairman and CEO of global financial services firm Cantor Fitzgerald, a company he has been part of since 1983. Cantor has acted as a custodian for Tether, the issuer of the world's largest stablecoin, USDT. Howard Lutnick has also spoken in support of USDT at the Bitcoin 2024 conference. So there you go, guys. That's big stuff there. Seen that crow move today. I know. Yeah, I did see it. Crazy. Yeah, this is big stuff. Like the U.S. government is going to be publishing GDP data on blockchain. Economic data is going to be held on blockchain by the U.S. government. This is a step forward toward things like ultimately voting and government financial transactions going ultimately to blockchain. Like, we are seeing the first steps toward breaking open the floodgate of full blockchain adoption by the US government and by governments around the world. You see my other comment. Silva, I don't even know. Well, as I was reading, I was reading the next word, millennia, and they kind of jumbled together. So let's see. Move on to the charts very quickly here. Share this tab instead. And guys, if you are in our Discord, you would have seen T-Square put out a good call in the Discord using Market Cipher. He put it out right around here. And we've had a measured move from that point. We put that out about a little after 5 in the morning, Pacific Standard Time. That measured move It's just on the hourly chart, but got a bit over 1% in a measured move there. So not bad. If you're on 2x leverage, that's a little over a 2% gain. If you bag that every day, you're doing very, very well. So 2% a day is much better than 8% a year. Just in case someone out there was bad at math. 2% a day is better than 8% a year, which is the average return on the stock market. And it's considered to be a very good return. Even though inflation is arguably 8% a year, so I don't know. Now, as we move into our chart section, I do want to come over here to our X account, and I want to say that if you use our link with BYDeFi for trading, BYDeFi is our trading exchange partner of choice. We have a new user deposit bonus event. You can get $2,000 bonus, no minimum trading required, only deposit to your crypto futures account. So the way this works is you deposit $100 and get a 50% bonus at $50. Deposit $500 and get a 50% bonus at $100. Deposit $1,000 and get a get a 20% bonus at $100. Deposit $1,000 and get a 20% bonus at $200. For larger traders, you have a 10% bonus across the board. You deposit $5,000 to get a $500 bonus, $10,000 to get a $1,000 bonus, and deposit $20,000 to get a $2,000 bonus. And today is actually the last day of this deposit event. So we should be getting a new one. Our partner over there, our business development contact over there should be, setting us up with a new event by tomorrow. So if you, and the way this works is that you make your deposit and you hold your deposit through the period of the event is what I would suggest. Then you can just remove your deposit. You can withdraw your deposit and then simply trade with your bonus. If you're not in a position to be risking your own capital, right? It's not to our advantage to tell you that. It's to our advantage that you trade with your whole deposit because we get commission on fees. But I'm just telling, I'm not on the screen. Dang it. Share this tab instead. Okay. There it is. Anyways, it's, we get commission on trading fees. It is a way to support the channel. And so it's to our advantage that you trade with your entire deposit. However, many people, I would venture to say most people, are not in a position to be leveraged trading with their own capital. And if you need to preclude yourself from that risk, then you can always deposit, withdraw your deposit after receiving your bonus, and then trade with your bonus. That definitely is one way to do it if you don't need to be trading with your own capital. So there you go. BYDeFi, check it out. You also get VIP level 2 status with our link that gives you a 20% discount on trading fees. So there you go. Next up, come back over to TradingView, and I want to look at the 4-hour chart on Bitcoin. So we have now broken above this 21 period moving average on the 4 hour. MACD is showing bullish momentum. Stochastics are showing bullish momentum, although they are a bit high. However, they can sort of hang out there for a while. The regular RSI is very neutral, so that's nowhere near oversold. Let's see here. We zoom out to the daily chart, and we have these tweezer bottoms here. How do you know it's a tweezer bottom, by the way? Right? As opposed to if you look over here and you're like, okay, this range right here. It seems like you see a lot of tweezers, right? But you have to identify the chart structure, right? The chart structure, this is a period of flagging out. So you're gonna see long wicks in both directions here. You know, you're gonna see wicks within this range. How do you identify tweezer bottoms? Well, the market structure, you have to be in a downward move on the market structure. You can't be in a sideways move and call tweezer bottoms. But right here on Bitcoin, we clearly had a bit of bearish divergence that came in back here. And this was followed by a small downtrend on Bitcoin. It's not a larger downtrend. It's a downtrend on smaller time frames, right? If you go back to the 4 hour, that's a downtrend, right? We made lower lows. But on the daily chart, on the larger time frames, in the macro, this is still an uptrend, right? This low back here is intact. It's very much intact. And we're still in a period of higher highs and higher lows. So when you zoom out anyway. So, you know, we started to have a clear move downward rather than a move sideways. And it's in the downward move that you can identify these tweezer bottoms. We had one right here, and it led to a nice rally. We had tweezer bottoms down here, and that led to a tremendous rally. We had tweezer bottoms here, and it led to a little relief rally, a small relief rally that came down to double bottom and then set a bullish divergence to continue up. But the point is, these tweezer bottoms are identified in a downward move. But the point is, in order for it to be a tweezer bottom, it has to be a bottom. It has to be a potential bottom, right? You don't identify a tweezer bottom here within a sideways move. So just a little education for us. And this green support line here that I've been looking at is beginning to hold very nicely. And we can, in my opinion, start looking for a move up to the 21 moving average at $116,000. We do have a CME futures gap all the way up to $117,000. So given the little bit of bounce that we're experiencing here, given the MACD sort of moving from bearish to neutral, and given the low stochastics and the stochastic attempt to cross back bullish, given all of this reasoning, I think that it is more likely that Bitcoin fills the CME gap to the upside sooner rather than later. Let me check in with the comments here. Okay. So that's what I'm seeing here for Bitcoin. Now, I want to move briefly to Ethereum. And on the 1 week, I want to draw that megaphone pattern that we looked at from the article we read. And it appears I think I should be drawing it from back here. And then drawing it from here to here. And then we pull the chart down. And the most bullish way to draw this measured move is from the width of the megaphone. And then pull it up. That brings you all the way up to $8,000, right? The article said 7, and I would say that is because the more conservative way to draw this, which is probably the best way, is going to be at the base of the megaphone, and then pull it up here, and that brings you to about $7,296 for Ethereum. And I think that this is in play personally. I think it's in play sooner rather than later, because I do believe that we are in Ethereum season at the moment, and capital is rotating very strongly from Bitcoin into Ethereum. So there we go. Finally, I will wrap up with a Cardano spotlight here and come on back over to Twitter. And check out Tap Tools. Just in, let me share this tab instead. Just in, Cardano stablecoin USDM has surpassed 3,000 holders and marked another milestone for the ecosystem. Some good movement on Cardano today, getting back up above 87 cents. Breaking news, Swift's chief innovation officer praised Cardano, Ripple, and Hedera for their role in driving blockchain adoption in institutional markets. A notable shift as Swift openly acknowledges blockchain's growing influence. There you go. I'm going to check out Stake with Pride real quick. Looking for any news here. And I'm going to check out Angry Crypto Show. Just in, Cardano's Strike Finance with ADA and SNEC Perpetuals plans to integrate BTC before the end of the summer to supercharge Bitcoin DeFi. Guys, This is in 8 minutes ago from Strike, and man, I will tell you that I need to go out and buy some Strike immediately. I just saw this right now on the stream. This is, guys, this is incredible. This is truly incredible. Wow. The Strike Finance, if you don't know, my Cardano hat back on. Strike Finance, if you don't know, is the leverage and derivatives, perpetuals, DEX on Cardano. So it's a DEX on Cardano where you can trade on leverage. You can only trade up to like 15x leverage or something, which, let's be honest, you shouldn't be trading with any more than that anyways. You probably shouldn't even be trading with 15. I got liquidated a small amount on 11x. So, come on here. I'm more of a 2 to 4x trader. Okay. So 15x is all you need. You don't need any more than that. But this is leveraged trading that's completely on chain. Your keys, your crypto. So the fact that native Bitcoin integration is coming to a leveraged, to a perpetuals DEX by the end of the summer is astonishing. Guys, I think if someone told us that, there was a day where if someone told us that, we would think it's crazy. And to think that this is happening on Cardano. Native Bitcoin to be traded with on-chain perpetuals, with on-chain derivatives by the end of the summer. That's incredible. So there you go. I don't have much more to say than that, so we will wrap it up. Thank you for tuning in to another episode of the Blockchain Brew Show. Please smash the like button, subscribe to the channel. We might not be the biggest, the best, or the brightest crypto community on YouTube, but we're absolutely the most hydrated crypto community on YouTube. Cheers.